A roller coaster week for stocks comes to a close with the release of the jobs numbers. In today's cover story, legions of foodies wait for hours for that final bite at a world-famous doghouse. Plus, thunderstorms are the latest setback for Chicago's O'Hare Airport. And see if you are smarter than a trader. We test the guy's knowledge about the 1929 market crash in Traders Unplugged. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning. I'm Angela Miles. It's October 3rd. In today's First Look, the Friday finale, jobs. Following a volatile week of trading, the labor report for September is due out today. The market expects 210,000 jobs were added to payrolls last month, and the unemployment rate will remain steady at 6.1%. Ahead of the numbers, the Dow closed down 4 points, the Nasdaq up 8, and the S&P was unchanged. Gold inched down $1 and oil traded 66 cents higher. But that's only half the story of yesterday's market action. The day started with heavy selling as ECB leader Mario Draghi failed to commit to more stimulus for the Eurozone. Then, mid-session, stocks came roaring back. After the bell last night, Krispy Kreme reported its CFO, Doug Muir, will retire next year, and Occidental Petroleum shares rallied on plans to spin off its California business. In Trader Talk this morning, Bob Iacchino, Tethys Partners, joins us now to give us his outlook on this Jobs Friday. What's your guess?
Well, I think a couple of things. I think last month's number was an outlier. The number you're going to see this morning, I think, is going to be a rebound from that, along with some revisions of the prior numbers that were a little bit weak. I don't expect it to be too out of the box strong, but the U.S. economy is definitely strong, and this is relative to other recoveries. But when you compare it to the last few years, it's strong and it's gaining strength, albeit at a little bit flatter of an angle. So I expect the number to come in fairly strong, somewhere in that 219 to 225 range. And again, look for revisions to the old numbers, because that's what I think is going to drive stocks higher this morning.
That was a wild turnaround in the market yesterday. Was that a case of buy on the dip, or were people short covering?
Well, there's a couple of things that happened yesterday, and I think it was really interesting to watch. We actually had a technical turnaround. We sold our S&P and NASDAQ positions on the 25th of September based on a technical turnaround. Rallied pretty hard the next day and then fell off a cliff as we expected it to. And the targets for those particular technical turnarounds were 1937 in the S&P, 4402 in the NASDAQ. Both reached, actually went all the way to 1926 in the S&P. When that happens, you see institutions get back in, and that's the buy the dip you're talking about. So I don't necessarily think, if it was short covering, it was day traders. But if you're going to actively manage your portfolio or be a day trader, these are things you need to know. You need to know where these targets are, because that's where institutions like us will put our trades back on. If you bought the dip yesterday, you've probably only got about 4 or 5% for a 10% correction. There will be big buyers down there, so it's a low risk buy.
Well, that's why we have you on the show to let us know. Thank you, Bob.
Thank you.
Chuck Kopla gets the ball rolling now with an encouraging sign from the labor market. Chuck.
Good morning, Angie. As traders await a status check on the job market, a key measure of layoffs hits a 14-year low. Outplacement firm Challenger Gray and Christmas reports employers plan to lay off more than 30,000 workers in September. That's down from 40,000 in August. CEO John Challenger says layoffs now are being driven by mergers more so than by cutbacks.
We haven't yet seen wage growth, but that is very likely to start going soon, because the labor market is tight and employers are going to have a more and more difficult time finding the people they need. They're going to pay up for those people.
Also, widespread job cuts in Atlantic City due to casino closures drove the data higher in September.
Ahead of today's unemployment data, the president lands in the Midwest to focus on economic progress.
So here's the bottom line. For all the work that remains, for all the citizens that we still need to reach, what I want people to know is that there are some really good things happening in America.
President Obama spoke at Northwestern University in Illinois. He stressed strides made in the economy since he took office during the financial crisis. The president cited job growth, an improved housing market, and says he's laid out ways to increase wages. Republicans called the speech a desperate attempt to rewrite his failed economic record before midterm elections. To get to the Chicago area, the president had to fly in and out of an airport in Gary, Indiana, due to last week's fire at the FAA facility.
More flight cancellations in Chicago kept passengers stranded and public officials furious at the FAA for lingering after effects of a fire at a radar facility a week ago. By mid-afternoon Thursday, approaching thunderstorms led airlines to cancel about 800 flights at Chicago's O'Hare and Midway airports as a precaution. Also because the FAA's fire-damaged radar facility in nearby Aurora, Illinois, continues to limit the capacity of air operations throughout the Midwest. The fire, September 26, was blamed on a suicidal communications technician identified as 36-year-old Brian Howard.
The remedy really is that in Washington there's a demand that contingency plans be transparent, they're clear, that they meet a minimum standard, that the system can be brought back up. You know, if one facility is brought down by a fairly low-tech terrorist or vandal, you might say.
The union that represents FAA technical employees says its members have put in 20-hour days to restore the system. Despite that, Chicago Mayor Rahm Emanuel blasted the FAA for its vulnerability and lack of adequate backup plans.
Global demand for new jets has Boeing pumping up production. The jet maker plans to increase its already record output of 737s from 42 per month to 52. Earlier, there were concerns Boeing would not be able to keep up, but now the company says an all-time high number of the single-aisle jets will roll out of factories.
United Airlines is racing to contact passengers. A Dallas patient infected with the Ebola virus traveled on 2 United flights in September. United is contacting hundreds of passengers who are aboard those flights. The Centers for Disease Control said there is zero risk, however, of transmission. Meantime, health officials are trying to get a promising drug to the mainstream. The New York Times reports Caliber Biotherapeutics could be tapped to mass produce an Ebola drug called ZMapp. The drug was originally made by a small company called MAP Pharmaceuticals.
A high-frequency trader has been charged with manipulating the commodities market. It's the first criminal case under the government's new rules against trading fraud. A federal grand jury charged Michael J. Kostya, the founder of Panther Energy Trading. He faces 6 counts of commodities fraud and 6 counts of spoofing. Spoofing is an illegal trading strategy of quickly placing and canceling orders, creating a false market. It's believed he made $1.6 million in profit. Kostya's lawyer is reviewing the charges.
76 million. That's how many customers JPMorgan Chase has just revealed were affected by a hack attack in July. It goes down as one of the largest corporate hack attacks ever. JPMorgan says contact information and addresses were stolen, but no bank information was affected. Yesterday, the New York Times released a report identifying a new hack attack since July. However, a JPMorgan spokeswoman responded to the report, stating the story is false. We are not aware of any new attack.
A money trail is forming in the wake of bond king Bill Gross jumping from PIMCO to Janus Capital Group. PIMCO's popular total return bond fund has suffered a more than 10% loss of net assets since he left. Reuters reports Schwab has dropped the fund. Allianz, which owns the fund, plans to have a new CEO by next year.
Sears is out with a new strategy to raise much-needed cash ahead of the critical holiday season. The retailer is offering stock in Sears Canada to its shareholders. New York Times reports that the struggling company could generate up to a $380 million cash infusion. Sears has lost $1 billion this year. In the U.S., Sears stock rallied 7%.
The CEO of Tesla is tweeting a tease about the electric car company's next big thing. Elon Musk sent out this mysterious message on Twitter saying about time to unveil the D and something else, along with the date of October 9th. Odds are high Tesla will introduce a Model D to add to its lineup. The tweet worked. Investors charged up the stock by 4%.
An extreme drop for GoPro. The wearable camera maker saw its stock fall 6% yesterday after its founder dumped 5.8 million shares. Nicholas Woodman said he and his wife are donating their shares to charity. However, investors say Woodman has found a way to skirt around IPO lockup rules. Those rules state that an investor cannot sell shares until 180 days after an IPO.
Instead of fretting over the stock market's steep sell-off earlier this week, Warren Buffett was buying the dip. The billionaire investor tells CNBC he bought stocks to add to positions Wednesday as the market sank. Buffett, who tends to stay the course, says he's not caught up in action by the Fed. And his latest major purchase is Van Til Group, the nation's largest privately held car dealership chain.
Alcoa moves into next-generation production of alloy to supply the aerospace industry, and it's going to mean new jobs. Alcoa opened the world's largest aluminum lithium plant in Indiana yesterday. 75 people will be hired to work at the $90 million plant. Forbes reports production could boost the company's third quarter earnings. Alcoa shares closed last around $15.
Disney is once again extending its contract with Robert Iger. Iger will remain CEO and chairman of the Walt Disney Company until June 2018. That is 2 years beyond his target retirement date. Nearly every Disney division is now thriving. Last November, the film studio released the smash hit Frozen. Disney shares are up 35% since last year.
Netflix is investing in Adam Sandler. The star has inked a deal to make 4 films that will premiere exclusively on Netflix. The online streaming company is keeping terms of the agreement, however, under wraps. Earlier this week, Netflix said it landed a deal with the Weinstein Company to distribute a sequel to the Oscar winner Crouching Tiger, Hidden Dragon.
Wayfair wows on its first day of trading. Shares of the home decor e-commerce site rallied to $37 after pricing in at $29. 4 IPOs hit the market today, including what could be a $1 billion IPO. FMSA Holdings debuts. The company provides sand products to oil and gas companies. Shares are expected to price between $21 and $24. The ticker is FSMA. iGate Pharmaceuticals also goes public. The pharma company focuses on treating eye diseases. It could price between $14 and $16. The ticker is IG. Taking a look at the economic calendar for today, it's non-farm payrolls for September, unemployment rate, hourly earnings, trade balance, and ISM services for September. Still to come, could layoffs become the next market movers for tech stocks? Plus, you won't believe what you have to do to get a glass of water at some restaurants. And doggone, the man behind a famous Chicago hot dog stand decides to close up shop. Constellation Brands, which sells wine, liquor, and beer, stumbled on earnings. The company fell short of analyst estimates. Constellation is home to Corona and Modelo beer. The company took a charge for a recall of defective bottles of Corona Extra. Plans are underway to expand in Mexico by producing glass. The CEO tells CNBC his spirits remain high for the company going forward. Constellation shares lost about 1%.
It isn't often that a business around just 13 years inspires the word iconic, but Hot Doug's, a gourmet sausage restaurant on Chicago's north side, is far more than a hot dog stand. It's become a pop culture magnet to the city of big shoulders and sometimes bigger waistlines. And as with all good things, it is coming to an end. If a love letter to fast food could form a line, the 6-hour wait outside Hot Doug's this week would be its snapshot.
Hot Doug's is more than just, a hot dog stand. It's more than just even a restaurant. It's a Chicago icon.
We've been waiting since 10:45 this morning, so we came for lunch, but we'll likely be eating dinner.
After 13 years, Doug Sohn, a culinary school graduate who's paired exotic meats with gourmet seasonings into an affordable fast food, is ready for the next course in his career.
I went to culinary school, 1, the combination going back to school, and 2, I wanted to learn how to cook. This was never on the agenda at all.
More taste is expected from even the French fries, cooked in duck fat.
It's really just more rich. Alligator, ostrich, crocodile, rattlesnake.
But for all the unique entrees, it is Doug Sohn himself who keeps people returning, whether to buy his book or lunch. Each customer getting a lot of personal attention, despite an average of 75 people per hour that grew much higher as Hot Doug's final closing approached.
I think it's a story of Doug. He's just really a great guy.
The only way I can compete against like a major franchise is customer service. That's the only way we can beat anybody else. I can't beat anybody in price, but treating people well, that I can do.
Sohn's turned down offers to franchise. He says he just wants to take a break and travel with his girlfriend, content to go out as top dog.
I think there are entrepreneurs who see this as an opportunity to step in, to not only take what Doug has accomplished, but maybe add to it and add their personality and make it a little better. And who knows, we may see the sequel to Hot Doug's.
After Hot Doug's closes today, the interior artwork and signage will be auctioned off to raise money to teach music to school-aged children in Chicago. Sohn has not ruled out an event-only return of Hot Doug's for other charity purposes.
Sounds like a great guy. A number of restaurants are now charging for a glass of tap water. According to MarketWatch.com, some Subway outlets are among the eateries no longer freely handing out H2O to customers, but will provide a courtesy cup to people who buy food. At finer restaurants, diners are charged a fee sometimes for the glass or steered toward bottled water, which of course comes at a cost. Coming up, getting technical. A trader tunes into sectors of the stock market signaling an upswing. And after the break, a crash course in history. The bonus round question that is 85 years in the making. They are ready to let loose. Traders Alan Nuckman and Scott Shellady. Crank it up for Traders Unplugged. Round number one, guys. Cut off nose. Of the top 10 job-cutting companies, which one will perform the best? Among the names, Microsoft and JPMorgan are on the list of planned layoffs.
Well, it is a who's who of corporations. It's unfortunate that the more they cut, the more profitable they are, the better their stocks perform. The stock I like on this group is UAL. UAL has been trading here between 40 and 50. That target's 60. Look for that to play catch up to some of the airline stocks that have flown high.
You must be shocked that people are actually cutting jobs, though, because the economy's been doing so great and we're at all-time highs in the stock market, right?
Actually, the layoffs are 4% lower over this same time period than they were last year. So it's slowing.
Yes,
it's slowing.
Still the same administration. I'm going to go with JPMorgan. I like Jamie Dimon. I think what they do is fantastic, and I like
cutting jobs is fantastic.
No, I like what they do as a bank. So if they have to cut jobs to make money, then so be it.
Round number two, cleanest dirty shirt. Where will money flows happen now? Stocks, bonds, or gold?
Death is not an option. You got to pick something. Where does money go?
Why can't it go in your mattress? Why does it have to go someplace? Why are you always selling the next snake oil to these people, okay? Gold, are you kidding me? A deflationary cycle?
I don't believe
Gold's
in
going
gold
down.
either.
I'm going to be maybe long bonds slightly, but I don't want to be long stocks. I mean, come on, this QE has not worked except for inflation of the stock market.
It depends on your outlook.
Okay.
If you're looking at 5 years from now, 10 years from now.
Well, you know, I'm just looking about my pocketbook. I'm not looking at 5 or 10 years. What are you going to be doing in 5 years? I know where you're going to be. You're going to be at McDonald's. You've never been in one.
It's 10. It's an outlook. You have to look at your time horizon. That's what determines where you put your money. And if you need it anytime soon, like you said, the mattress might be the place.
Round number three, payday. Hedge funds are richer than ever as of July. 305 funds, each banked more than $1 billion.
Yeah, it's a crazy industry. There are 10,000 hedge funds. But what I see changing, first you have to be an accredited investor, so that's a whole different ballgame. It's not for individuals. But what I see changing is that over time, they're going to do away with this 2 and 20 fee structure because big pension funds, state pension funds, are balking at this and say, listen, I'm not paying that amount for you to invest our money. And over the last 5 years, they've performed less than the stock market.
So what are you going to do?
I'm just saying hedge funds are an interesting racket right now.
David Tepper, Appaloosa Management.
On to the bonus round question. October is infamous for the major crash of 1929. Which one is not an actual crash fact? A, 16 million shares traded in a single day. B, billions of dollars were lost. C, low wages was among the reasons for the crash. Or D, investors who stayed in the market never recouped their money.
Well, you were there that day. How'd it go?
Well, because I was in the market. You weren't there, and you weren't at McDonald's. So I don't know where you were. I don't know. That's a good one. I don't. Maybe C.
All of the above.
The answer is D. The stock market regained the level lost 25 years later. Thanks for coming on the show. First Business continues right after this. Dan Deming of Equity Armor Investments joins us now for Chart Talk. Good morning to you, Dan.
Good morning, Angie.
What are you watching for as far as hints to what could be next in this market?
Well, I find it pretty interesting. Actually, yesterday we saw a little bit of a blow off there. Early in the morning, we saw most of the major averages down significantly and then able to rally and kind of maintain the levels into the close, at least close closer to unchanged. And the one area that showed actually some strength after a lot of weakness over the last month was the Russell. We saw the Russell up almost 1% yesterday. So from a short-term perspective, maybe you could glean a little bit from that, hey, maybe we saw a temporary bottom put in yesterday.
Also, the financial showing leadership in the market.
Well, on a relative strength standpoint, they are. You're seeing the XLF, which is an ETF based on many of the major financial stocks, actually just getting down to its 50-day moving average right around the 23, or I think 22.97 is that level. And, you know, relative to what we've seen in most of the other major sectors, we've seen most of those indexes now well below their 50-day moving average. So, yeah, from a relative strength standpoint, the financials are hanging in there.
What is the volatility index signaling?
It's starting to signal, like yesterday we saw the VIX pop up to 18 and then reverse and close lower. So from, again, a short-term perspective, that reversal intraday and a lower close would indicate possibly the market has put in a temporary bottom. Also, I think it's really key to point out, Angela, that as we roll into October, the market now is starting to move on a relative basis, or I should say on an actual basis, a realized basis, much more in the last week or two. We're seeing realized volatility picking up. Even though the VIX hasn't necessarily jumped up significantly, we're still seeing it at the elevated levels right now.
Good to have you here. Thank you.
Thank you, Angela.
That brings our show to a close for this week. Coming up on Monday, Christmas creep is already happening as retailers dress up stores for the holiday. Find out why consumers should shop early this year. Thank you for watching today. From all of us at First Business, have a great Friday.